Support for CFO Thought Leader comes from Brex and Anrock, one tax engine for your global sales.
Hi, this is Gina Mastantuno, the CFO of ServiceNow, and you're listening to the CFO Thought Leader podcast.
This is episode 1068.
And, again, what I've seen in a private company is if you're not on the path to an IPO, well, you're thinking about an exit. And again, PE-backed companies, VC-backed companies, at some point, the investors need to sell and the funds need to give the money back to the limited partners. So now I run a process, and then they'll say, okay, I'm going to go sell to a strategic buyer. I'm going to sell to a financial buyer. And they get one bid. That's one company that's interested, and they can't get a second one at the same time. Now there's no negotiating leverage. Now you got one buyer who believes they've got all the strength, and you're trying to argue, and you can't. Well, guess what? If you act like you're going public, and now you can say, well, you know what? I know there's no competition, but I'm on the path to go home. So if you want to take me off that path, you need to give me something close to what I get as a public company.
Hi, it's Jack. On today's show, we speak with Bill Korn, career CFO and board advisor. From CFO to boardroom strategist, Bill Korn has seen it all. From IBM's historic turnaround to guiding companies through IPOs, M&A, and rapid growth, he's been at the forefront of financial transformation. Now, he's leveraging his expertise in the boardroom, helping small-cap companies scale and outmaneuver industry giants. But there's more. Of all the finance leaders we've spoken with over the years, only a handful were in the room during what would arguably be one of the most pivotal moments in business history. Bill Korn was one of them. On this episode, you'll hear how Bill approaches board leadership with the same strategic, forward-thinking mindset that defined his CFO career. And as a bonus, we've included a portion of our earlier conversation with Bill where he shares his journey to the CFO office and explains for us how that path intersected with IBM's game-changing CEO, Lou Gerstner. Our episode begins after this. Have you heard about Brex? It's the world's smartest corporate card. Finance leaders love it because it's got powerful controls and rewards that help them make every dollar count. Here's why Brex cards are so smart. You can embed your expense policy inside the card. This lets you control employee spending before it even happens. Brex cards also automate manual expense, tasks like receipts, memos, and reviews. So you're free to focus on optimizing your company finances. Over 25,000 companies take every dollar further with Brex. Join them at brex.com/grow. We're speaking with Bill Korn, and let's give you a few background items on Bill. With a career spanning over 4 decades, Bill Korn has been at the forefront of business transformation, from IBM's historic turnaround to leading high-growth, technology-driven companies. A Harvard MBA, he began in the semiconductor industry before joining IBM, where he helped shape its services strategy under Lou Gerstner. Bill later became CFO of an e-banking joint venture backed by IBM and 19 financial institutions. Along the way, he gained invaluable boardroom experience. A 7-time CFO. Do I have that right, Bill?
7 times, yep.
He has structured and closed 24 acquisitions, raised over $500 million, and led CareCloud, formerly MTBC, their IPO, defying market skepticism. Now, as a board member and a strategic advisor, Bill helps small cap and private companies navigate IPOs and outmaneuver larger competitors through M&A and capital market strategies. Bill Korn, welcome.
Thank you. It's great to be talking to you again.
Yes, and I think it's been about 7 years, I'm frightened to say, Bill, which was a surprise to me. Came across you on LinkedIn. It occurred to me that you're opening a new chapter, one that's going to be focused on board memberships. Thought, wouldn't it be great to talk to you about that and board memberships and mentorship and what have you? And it would be just great to catch up with you again. So we're happy to have you back on CFO Thought Leader. But what would you tell us about this chapter, Bill?
Well, I've been on boards for many, many years, and yeah, probably been to 200 board meetings. I mean, so it's not new to be involved in boards. I think at a certain point after 43 years as an executive, I decided, okay, I'm 67. It's time to kind of retire from the full-time job, but I feel like I still have 20 more years to spend time helping people, and maybe it's not 40, 60 hours a week. But it's whenever there's a problem, whenever there's a question, wherever I can contribute. It's nice to keep your mind busy. I mean, it's also nice to have a little bit of free time and be able to do some other things as well. And I think it's great that when I left CareCloud as CFO, I was able to join the board and continue to help the business. And if people have a question, they can go back to the guy who was there for 10 years. And I'm still there, and I'm still, and even investors call me, and they just remember my cell phone. They don't happen to remember that I'm retired, but that's okay. And I can still talk to them and be of value. But it's also fun to help other companies. And so I joined a board 4 years ago of an apparel manufacturer, and you could say, well, what's common between Jerash that makes jackets for North Face and people like that? How does that relate to a healthcare technology company? Well, both of them have a large global presence. In each case, 95% of the employees are overseas. They're all dealing with all the global supply issues, and I've been able to help them. And my view is that there's a lot of businesses that can use help. There's a lot of CEOs who do you turn to when you've got a question? Okay, if you've got an outside board member, you can give them a call and you can get some advice. And sometimes, as a board member, I don't know nearly as much about their business as they do. But sometimes that's okay, because I can ask these dumb questions like, well, why can't we do this? And you know what? Sometimes if you've been in the business, you quote, no, you can't do something. I mean, we saw this week, NVIDIA said you can't do this, and somebody else, 8,000 miles away was able to use the chips and figure out how to do something different. But sometimes there's actually value in people trying things that they don't know that they can't do.
Yeah, excellent. Having been in as many boardrooms as you have, when you see the value that a CFO board member can bring, someone like yourself, a CFO veteran, can bring, can you help us understand how does your CFO experience influence your approach in the boardroom?
Sure. From one perspective, while a business has a lot of stakeholders, one of the most important ones is the investors who want to see you profitable. They want to see you making enough money that you could share it with employees, that you could produce good products and good value for customers. So being able to look at things that way is always a good perspective. I view that even though I've been a CFO 7 times, my MBA at Harvard was really more general management. And I've been COO, and I've been a president of a company. And I've never looked at the world from just the lens of a CFO, because I do feel like a CFO who looks at things just from dollars and cents, well, maybe they're not really the CFO. Maybe the CFO needs to realize the most important assets are the people who go home at night. Those are more important than the assets that are on the balance sheet. And so you got to be able to look at it from an overall perspective, which I do think that I've had the fortune over the years to work with a lot of people who've helped me to gain that experience.
What is it that you look for in a company before you're joining its board?
Yeah, it's all about the people. I mean, if you tell me, we need to kind of dig down into the technology and be sure it's the best, the technology is not the big answer. It's the people and their ability to treat other people correctly. Whether that's employees, customers, suppliers, you could always, in the short term, you could always get a little short-term benefit by doing things inappropriately, but it always bites you. So you need somebody who's thinking about this long-term, who's thinking about how am I treating my people well, how I'm providing value for my customers so they want to continue to do business with me. Sometimes people talk about, you need to lock in the customers with contracts. I mean, yeah, you could do things in contracts. That's important. But what locks in the customer is the feeling that you care about them and you're solving their problems. And again, I'll go back 30 years ago. I was at IBM in a program where I helped train the sales team to sort of reorient how they were selling. And the answer was, you're never going to win by explaining why your box is better than a competitor. Somebody else is always going to be able to build a better box cheaper. The way you're going to win is, I understand your business and I can help you use technology to gain a competitive edge. So you're a customer, pick any customer. You're operating in 100 companies. Me as the IBM person, I'm going to understand those countries. I'm going to understand what you're doing. I'm going to help you to grow. I'm going to help you to reduce costs. And if I do that, then you'll buy my equipment. And if I explain why my machine is better or faster, you're going to go to the cheaper machine, and I'm never going to win. And I think that's applicable in all businesses.
In so many companies, the board members, you think about how they support management in executing the company's growth strategies, try to help them understand better some of the dynamics there. But there's also the governance oversight. Wondering, as a board member, sometimes you have to sort of help the company achieve that balance. Can you reflect on that a little bit?
Well, I think you need to do both. And I mean, clearly you need to make sure that that things that are being done are being done right. And, sometimes people have said, well, is it legal to say this? And my first response is it true? If it's not true, then I don't care what you think about it. Then it's still wrong to say it. Okay. If it's true, if it's not breaking laws, then now we're starting to be on the right path. And, do we have some controls? And again, sometimes it's the notion of, we're going to move fast and we're going to break things is a great idea. Again, that doesn't always work for you. Again, it sometimes works very well in the short term, but sometimes you need to actually be thinking about what you're doing and be sure you're doing it right. But I view that a board member needs to be doing more than that. And I want the executives in the company, whether it's the CEO and the CFO, to be able to pick up the telephone and say, hey, Bill, we're having a question about this. We're thinking about that. How might you approach that? And be able to think back and reflect on it, and sometimes brainstorm ideas. Sometimes say, hey, I need to let me do a little bit of research. Let me think about. Let me read about what other people are doing. And again, if you view the board member role the way I do, your goal is to help that company succeed. And let's take a private company who doesn't think they're going to go public anytime soon. Maybe they're actually never going to go public in their mind. Well, let's get you to act like you were going to be a public company. Let's get audited financials. Let's start making plans and setting expectations and closing our books in a timely manner and talking about how we did against expectations. And those are things you need to do as a public company. You surely don't want to start that process the week after you go public. And in fact, if you do that as you're private, you start to look like you're public. And I've been with private companies where customers have said, boy, you guys look 10 times the size. You act like a public company. And in most cases, that's really what customers are looking for. Is they want somebody who they think is going to be around. And if you can act that way, if you can operate that way, guess what? You're going to grow into that role.
Now, from what I recall, you successfully guided CareCloud, which at the time was known as MTBC, through an IPO when many investment bankers were skeptical. I'm wondering what the lessons from that experience might have been, considering the public markets today.
I mean, the first lesson is when people tell you something is impossible, it's probably not. That just means that they haven't figured out how to do it. And when I joined CareCloud, again at the time it was MTBC. This was a $10 million company, and the founder of the company said, "Bill, now that you're joining us, we could be public in 2 months." So I laughed, but I thought he had an interesting strategy, which was, let's go buy a couple of companies on the day of the IPO. We'll be bigger. And we'll still be small enough that we won't get the biggest bulge bracket investment bank to take us public. But all we need to do is get somebody, and then we just need to start setting expectations for investors and meeting them, and we'll succeed. And that company that was $10 million 10 years ago is a $120 million company today. And we successfully went public. Now, at one level, some of the bankers were right that it's difficult being public when you're small. It's hard to get the message out. But the benefits of being a public company is we were able to get the capital that we needed to grow both organically and through acquisition, able to expand our reach, and we serve, I don't know, 40,000 doctors. And I don't know how many of them wouldn't do business with us if we were private, but I bet some of the bigger practices, some of the health systems, take comfort in the fact that, okay, this is a public company. It's going to be around for a while. I'm going to use this technology and it's going to work well. And if it doesn't, I'm going to know where to go. And, I think 2020 was an interesting year for the world. We, and at the end of 2019, we introduced a telemedicine app, and we integrated it in our platform. And we were thinking about launching a telemedicine service. COVID hit, and we instantly pivoted and said, you know what? We're not going to do a separate telemedicine. We're going to go tell our doctors it's in the platform. It's in the patient portal. You can do telemedicine visits, HIPAA compliant with your patients tomorrow. And by the way, I'm still going to charge you, as I always did, a percentage of the visit. So you're not going to pay for the technology per se. Those doctors were able to continue to operate seamlessly. And again, I found it interesting because my wife's a pediatrician, and at the time she was working for a local hospital that used someone else. They didn't have a HIPAA compliant telemedicine app. They told her and the other doctors just use FaceTime to talk to your patients, which, as I told her, means your patients can now FaceTime you at 3:00 in the morning. So that's probably not a good way to do this. And again, I think going public, investing in the capabilities really put us way ahead of the curve. And I think going public, even though it was earlier than people would have suggested, it was clearly the right thing to do.
What do you think the biggest misconceptions private companies might have when it comes to IPOs?
I think the big misconception is I'm too small. I can never do it. The investment bankers will always tell you you're not ready. And I guess I've heard this enough times that I realize there's a little bit of a mating game going on here. You're not big enough. Okay, you're big enough, but you're not profitable enough. Well, you're profitable enough, but you're not growing enough. You're growing, but it's not all organic. I mean, there's always one more thing. And at some point, the company's got to be able to say, yes, despite all that, here's what I'm doing, and I'm going to go public. It's either going to be with you or it's going to be with somebody else. How should we do this? And again, what I've seen in a private company is if you're not on the path to an IPO, well, you're thinking about an exit. And again, PE-backed companies, VC-backed companies, at some point, the investors need to sell and the funds need to give the money back to the limited partners. So now I run a process, and then they'll say, okay, I'm going to go sell to a strategic buyer. I'm going to sell to a financial buyer. And they get one bid, that's one company that's interested, and they can't get a second one at the same time. Now there's no negotiating leverage. Now you got one buyer who believes they've got all the strength, and you're trying to argue, and you can't. Well, guess what? If you act like you're going public, you've got a couple of dependent board members, you've got audited financials, you've got processes in place, you've put together a pitch, you've even written a confidential registration statement. Maybe you filed it confidentially with the SEC, maybe you haven't. Now you look like you could go public. And now you can say, well, you know what? I know there's no competition, but so-and-so investment bank says I'm worth X amount in the marketplace. And I'm on the path to go public. So if you want to take me off that path, you need to give me something close to what I get as a public company. And if you'll do that, maybe I'm interested in working with you. And if it's not attractive, I'm still on my own path. Now as a private company, now I finally have a little bit of leverage against the buyers. And I would advise anybody who's thinking they're going to exit their business anytime, a year, 2 years, 3 years. Think about getting a couple outside board members. Think about getting at least somebody on the board who's been through the process that can help you. And as you go down this process, you're gonna make yourself so much stronger that the investment that you make there, it's going to pay off 100 times when you exit, regardless whether you actually go public or not.
We want to touch on M&A with you. And again, you've structured and closed, I think, 24 acquisitions. What's the, what's the most critical factor in ensuring an acquisition delivers long-term value, Bill? What would you tell us? What is the most critical factor there?
I think it's the strategy. I mean, the execution and the implementation is important, but it's got to make sense, and it's got to make sense for a good reason. And if it makes sense just for financial terms, it's probably not going to be that home run. I mean, it might turn out okay, but I view that sometimes people will say, if I'm a company of a certain size, I can't buy anybody bigger than half my size, a quarter my size, a tenth my size. I've done a number of deals where we bought companies that were bigger than we were. Again, take Care Cloud. That's an interesting example. When we were thinking about going public, a couple of the investors we talked to, we were called MTVC at the time, which was not as good a name. It doesn't roll off the tongue quite as well. We had a couple of people say, even if you go public, they mentioned 1 or 2 public companies, but they also mentioned this big private company that's so well funded, they're going to eat your lunch. And that company's name was Care Cloud. And we started talking to them in the end of 2019, and they were bigger than us. They weren't nearly as big as they were kind of saying they were. They'd gone through a lot of venture capital money, but they were not profitable. They were in default on their debt. And the answer is we were able to buy them, and we bought them from the debt fund that they'd lent the money, that had lent the money. Their venture capital investors lost everything because it was done upside down. And that one example, I remember one time, at Antenna Software, it was a startup. We were a little software company with like one customer, and we bought this $6 million company. And guess what? When we bought them, we were still wound up in control. So you can buy companies that are bigger, and it allowed us to move from a startup with technology people to, okay, now we actually have an operating business. We have customers, we have sales. We kind of moved into a whole new phase of our career. And a lot of times you can do this. Again, you talked at one point about this e-banking venture that back in the early 90s, when people were just learning about the internet. I was at IBM, and we're thinking about how to help the banks who are our biggest customers. And at one point, they said, well, okay, if we created e-banking venture, we need to be joint owners with you. We don't want to be beholden to IBM. And the IBM's senior team was able to figure out, yeah, we can give away ownership. We wound up with 20 owners, each owned 5%. Okay, we're not going to be in control, but we're going to be sitting there in the boardroom with the heads of all the major U.S. banks and major North American banks, because there were a couple of Canadian banks as well. And we'll see the business. Well, we had a startup business. We had like 10 people, and Visa was exiting an e-banking business, and we bought that. And again, we're nothing. We're just starting. We have no revenue. Okay, now we buy a 100-person operation that's got some technology, that's got some customers, and again, we were able to do that and integrate it into the business and really leapfrog ourselves. And I think this joint venture actually created a lot of the core backbone for e-banking that people do today. 2 years after it got started, the technology was so open that eventually we all wound up agreeing that the right thing to do was not leave it as a separate company, but rather disperse the technology across all the owners. Everybody wound up getting a return on their initial investment, and the world got an open banking platform that allows you to bank with Quicken or whatever you want to do today. So a lot of things that you don't necessarily know where it's going to lead, but you can get there if you're thinking openly.
Just want to talk a little bit about small cap companies as they look to outmaneuver larger competitors. What are some of the strategies that you've come across, championed, most effective that you believe? Again, as these smaller cap companies outmaneuver larger ones, what are the strategies they should pursue?
I mean, I think the first strategy is hiring the best people. And you could always find someone to do this cheaper, but cheaper is not necessarily better. You need to get good people. And if you're management, I don't care what size your company is, you need to have people working for you who are better, who are smarter, and that will always help. And you need to be focusing on how do I help my customers to succeed in their business, because they don't really care about helping you. They only care that you're helping them. And if you do that, and again, this is almost a golden rule kind of thing. I'm going to treat my suppliers properly so that they're not going to have a motivation to kind of go around me and stab me in the back. And I'm going to work well and think about how do I use technology? How do I use offshore for competitive advantage? And you're a small business. You got to do things better than somebody who's bigger. But better can be done in a lot of different ways. And in each company, how you do it better will be a little bit different. But you're always thinking about how am I going to do better, and how am I going to make the people who are working with me feel positive that they're working with me and want to stay with me and not want to move on to somebody else.
You mentioned up front the deep seek, how the capital markets responded to the notion that no one seemed to be aware of, that something a more efficient model or offering could come in and sort of disrupt what's already just beginning, I suppose, in many of our minds. Given the nature of how volatile this could be, what is the mindset a CFO should have when they're assessing their investments in new AI in the company? Are they going down the right path? Is this investment really where we should be concentrating? Can you just share some of the conversations perhaps you've been part of?
Sure. And sometimes people will say, well, okay, AI is not applicable in my business. And I'm sure there's a business where that's true. I haven't found it yet, but I'm sure there's one business where it's not applicable, because I do think AI has got a lot of power. And again, it's not always going to do exactly what you thought. You do need to approach it carefully. I know someone else who was a board member. In this case, he was a board member of a not-for-profit, and he was thinking about using AI to take notes during the board meeting, because he said typically they had a person taking notes, and they didn't do a good job. So he was sure that ChatGPT could do a better job. And the answer was yes, it did a better job. And now the entire notes of that conversation and all the things that were there are now public domain. And that was not what he was thinking about. So you can't just leap. You do actually sometimes need to look, because again, the worst thing that you can do as a board member, or as an executive is now you're taking your insights, your confidential strategy, and kind of making it public. But I do think there are a lot of areas where AI can help you. Again, you're always going to have to take what comes out and test it. And does this really make sense? I mean, we hear people say, "Oh yeah, the AI hallucinated." Well, the AI was giving you something, but it wasn't necessarily giving you the answer. And in some ways, it's no different than the navigation system in your car. I mean, you don't always rely on it. It's not always right. It's usually, if you use it the right way, it helps you to get there. But sometimes you apply some common sense and say, no, I know there's a better way to do this. And you can do the same with AI. And, I do think that the companies need to be better at experimenting with the use of AI. How can it make my employees more productive? Again, it's not that AI is going to eliminate the jobs. It's that people using AI are going to be so much more effective than the people who are not using AI. And now I'll be able to do more with less. And again, that's a good thing. And employees should really actually embrace that, because you know what? If I can accomplish twice as much with AI, on one level, somebody says, well, now you only need to have as many people, but now your value is twice as much. And how much are you worth to the company? It's now twice as much. And in general, moving to higher and higher value activities, that's the path for personal success as well as for the business to succeed. And I do think you can do that and take advantage of AI. And again, you need to just be thinking broadly about ask it some dumb questions, see what it answers, and if it gives you something that seems worthless, then don't pursue it. But if it gives you something that might be worthwhile, well, investigate it a little further and see if it's worth following up on.
You, in your past, of course, have mentored an executive as they take on greater responsibilities. What qualities do you look for in the next generation of finance leaders?
Yeah, I think we touched on this before, that to be a successful finance leader, to be a successful CFO, you need to be thinking about the people. You need to be thinking about the business issues and the strategy, and you need to apply the financial discipline, but you need to not be just looking at the numbers. And so anybody who's like, okay, I'm a numbers person, well, okay, CFO is not a numbers person. CFO is supposed to be the person that's helping the CEO think about the strategy, think about how do I add value, and that's what you need to be doing, is approaching the business problems from a business perspective. And again, I can remember a time as a CFO of a company, and when a company was struggling, like many companies struggle at times, and the person heading sales and marketing wanted to spend more on sales and marketing. And they thought that the CFO was going to say, no, don't do that. And, I recognize the only way we're going to grow is we're going to have to make that investment. And so the answer is yes. Jim says, let's double what we're spending on sales and marketing. Let's think about how we're doing this the right way. Let's try to make sure that as we're adding people, we give them a reasonable time to be productive, but at a certain point, if they're not there, that person doesn't work, we need to go replace it. That doesn't mean we don't spend the money. We need to spend it carefully, but you got to look at it for the long term. And again, when you look at it for the long term, when you look at it from the perspective of the whole business, eventually that's the way that wins.
If a CEO or a CFO of a small company is considering forming a board, what advice would you give them on assembling the right mix of directors?
Yeah, good question. So, I think that, again, it's all about getting good people with a variety of experiences So, find someone who knows something about things that you don't know much about. Because again, finding 3 other people who can parrot your ideas, that didn't actually help you. So you need to get people with different perspectives. And we hear about diversity and whether diversity is good, bad, or evil. Well, you know what? Diversity per se is good. Diversity isn't the color of the skin. It is your gender. It's the way you think. So get different people who think differently. And, maybe some of them will have come from different backgrounds, and that'll have helped them to think differently and be able to have open discussions. And again, a board that just rubber stamps. I mean, they may be kind of doing their official duty, but they're not really adding a lot of value. Board members need to be able to feel free to speak up and give suggestions. And sometimes the suggestion is not a good one. And then they need to be able to be mature enough to say, okay, I gave the suggestion and they thought about that. And that's actually not the right way to go. But okay, at least I brought it out. And, you're not, as a CEO, you're not giving away control when you have a board. You're actually empowering yourself because you've now got some people to help you. And the cost of adding, 2 or 3 independent board members who are putting in a few hours a month, that cost is nothing compared with the cost of hiring full-time people. And you're not going to get as much, but on the other hand, on a per hour basis or on a per dollar basis, you're going to be getting a lot of valuable insight if you ask for it.
No, I was trying to recall. I believe you and I actually met at an event, and I just mentioned that because for those finance leaders who are seeking to become more publicly known or become potentially a board member, it seems like they sometimes have to raise their profile and really make themselves known. How do they put themselves out there?
Well, as a public company CFO, it was actually not that hard because there are a number of conferences for companies, and often the CFO goes with the CEO. Now, in my company's case, at times the CEO or the chairman were actually focused more on growing the business and dealing with the customers. And they'd say, okay, Bill, could you go to this conference without me? And I was doing that. And in some respects, that's not a bad thing. And sometimes when you go to an investor conference, the CEO tells 80% of the story and the CFO tells the numbers. Well, I'm going to tell the whole story. And you actually caused many the industry analysts and the bankers to kind of confuse in their mind. Bill's the CEO. No, I'm actually not. I'm the CFO. But again, I'm thinking business picture, full business picture, not just the number side. And I do think getting out and meeting people and talking to people and getting out of your comfort zone a little bit is definitely a good thing to do. And networking is a great way to meet people and meet people in different areas and find out that you can help them.
Bill Korn, thank you for joining us on CFO Thought Leader.
Yeah, thank you for having me. We shouldn't wait another 7 years to do this again.
As promised, here is Bill Korn's path to the CFO office.
Hello and welcome to CFO Thought Leader. Our guest today is Bill Korn, CFO of MTBC, an IT healthcare and medical billing company that is using offshore centers to truly drive corporate performance. Those centers are today in Pakistan. Bill, welcome.
Thank you. Glad to be here.
It's great to have you. Before we ask you to share what's happened at MTBC, Bill, following your arrival, let's find out a little more about you and what were some of the career experiences which helped shape you for a CFO role.
Thanks, Jack. Maybe I'll highlight 3 things that were sort of milestones along the way. I'd say maybe the first one was getting my MBA from Harvard. And, I did this, very early in the career, right after graduating from college. And I knew I was interested in business. I wasn't sure exactly which aspects of business. And Harvard Business School was really a great opportunity because, for those who've never been there, you analyze 3 different companies with 3 different case studies on 3 different problems every single day. So you get to be an expert in 3 industries a day, 15 brand new situations every single week. And they really, even though there are courses in finance and marketing and production, they really try to focus on the big picture and the interdisciplinary effects of things. So you might be in a finance case, but you're talking about the impact on the people, or you're talking about a marketing case and how does that impact production? And so not only are you learning about and thinking about these things, I think the most valuable part of the school is you're sitting there in a room with 80 other people who've had 80 different sets of experiences and bring 80 different perspectives to life. And the professor's role in the classroom is really very different than a typical college classroom. The professor starts off and says, good morning, Jack. Okay, if you were CEO of General Motors in this situation, what would you do? Tell us for about 15 minutes what would be your plan of attack. So you really get to hear people on the spot talking about things based on their experiences and commenting and questioning each other. So it was really a great sort of framework to think about a role in business. I left Harvard. Many of my peers went into consulting or investment banking. I was actually more interested in a company that was going to do something, make a product, make a service where I could be there and have a real impact. I worked in a small semiconductor firm, and then a couple of years out, I joined IBM. Spent 10 years there, and I guess I'd say that was sort of the second key career milestone. I spent 10 years at IBM. This was in the 80s. The company was losing money, in the sort of the order of billions of dollars, and trying to figure out how to get their way in the world. And was in an interesting situation where we were really trying to help the company find its way back to the past and help salespeople stop talking about the technical products, technical features of the products, and really help customers solve business problems. Because at the end of the day, the way you sell more computers isn't explaining why your machine is 5% better than Hewlett-Packard's. It's by explaining, here's how I can make your salespeople more efficient. Here's how I can improve your operation. I understand your business. I'm going to solve your problems. Oh, and by the way, I happen to have some hardware and software to go along with that. So that morphed into a consulting business. I actually became one of the founders of what was called IBM Consulting Group. So everybody's heard of Boston Consulting Group. No one ever knew there was an IBM Consulting Group, but we were actually doing that for a little while. And then Lou Gerstner came in as CEO. And again, this was a time where IBM was going through a lot of transition. Lou was not a member of the firm before. He was outsider to the industry, but he came in sort of with a perspective of I'm like a customer. I'm gonna really help this company turn around. And the first thing he did was to fire his whole corporate strategy team and say, I want new people in here to help me think about the strategy. So about a week after Lou joined, I got a call saying, Bill, how would you like to get a slightly different consulting role? Instead of being, helping clients, now you're going to move to Armonk. You and 10 people will have a really little project. You just have to spend a year figuring out, do we keep IBM as one company or do we break it up? And if we keep it as one company, what are we? Are we a hardware company that happens to have some services? Or are we a services and solutions company that happens to build some boxes? So, that was, to me, was a great experience. I would say at the end of the day, there were lots of people lobbying that IBM was too big to manage. We concluded that if we broke it up, we'd wind up with 5 little IBMs that would compete with each other, that would drive out the profits, and you wouldn't have much of a business left. But if you kept it together, what could we do different than anybody else and do better than anyone else? And the answer was know the customer's problems, solve his problems worldwide, and say, look, you could buy this from this company, you could buy a mini computer over here. I deal with you, Mr. Customer, in 137 countries. I know your business. I can solve your problems worldwide. Trust me. And so, focusing on the solution, focusing on the customer was the way to do things, even if it meant that sometimes your solution involved somebody else's hardware, somebody else's software. And to lose credit, he went along with that strategy. And I think IBM did very nicely under that regimen. Lou was also one of the first to really see the power of the internet. And I'd love to say that myself or the other guys on the corporate strategy team steered us there. But the reality, it was actually Lou Gerstner himself who said, we're going to do this, and we ought to major in it. And that sort of then led me into to working with folks, building a joint venture between IBM and 19 financial institutions to build e-banking. And that sort of led me then to my third milestone in and I was CFO of this e-banking venture. But, one of the things that really helped prepare me for future CFO life was really the board dynamics in this company, because we formed a business that was owned 5% by IBM and 5% each by 19 financial institutions. So 20 owners, each of whom had a board seat, plus the CEO. So there's 21 official members of the board. I got to go to every board meeting as the CFO, and the board members from the banks were usually either the EVP of retail or the CIO. So pretty powerful folks from 19 of the largest banks in North America. And every 2 months we had a board meeting in somebody else's boardroom, and I really got to see the board dynamics and the things that were interesting to the head of Nations Bank or the head of B of A. And some of those things had to do with the e-banking stuff we were building, but some of the more interesting discussions were, maybe Nations and B of A should get together. And, next meeting we all of a sudden had one less owner because the two of them had merged. So I really got a chance on sort of the inside track to see how boards work, and how the things that you're working on a day-to-day basis in the company are important, but some of the things that really matter aren't so visible on a day-to-day level. And to me, that I've been involved on boards of directors for the last 15 years, and having that perspective, I think, gives me a lot better focus when I'm thinking about the day-to-day job.
Hi, it's Jack. I hope you're enjoying this special episode featuring Bill Korn's present and past. When we return, Bill will be sharing a finance strategic moment with us, and he does a tour de force in the mentoring round, offers a lot of great advice. So I hope you'll stick with us. We'll be back right after this. Today, companies are global from day one. And as your business grows, so does your global tax liability. Enrock is the only enterprise solution built for modern business models, like SaaS, that automates sales tax compliance worldwide. For most companies, sales tax compliance is actually high risk. SaaS businesses that take a reactive approach lose on average 4.3% of revenue to unpaid tax, penalties, and interest. So while other tax solutions are stuck in the retail era, Enrock enables proactive compliance. Get full control of your tax obligations and enter new markets faster, even as new tax regulations and requirements emerge. Reduce your time spent on tax compliance to minutes per week with automated exposure tracking, tax calculations, and filing. Trusted by industry leaders like Notion and Anthropic, Enrock also integrates seamlessly with your existing tools, ensuring accurate tax monitoring 24/7. Don't let complex tax regulations slow your growth. Visit enrock.com/thoughtleader today to see how we can simplify your global tax compliance.
Bill, this is where we always ask about what we call an aha moment in finance, a moment where there's some strategic insight that a finance leader might have that leads them to change the direction of the company, or perhaps look at the world, the competitive landscape a little differently. You've had so many along the way, and I think you've already shared a number of them, but would you have another to spare for us?
Sure. And this sort of is, it's not necessarily changing the company, but it's really changing my little piece of the company. Because when I joined, as you said, we were $10 million of revenue. I didn't share the fact that we only had about a dozen employees in the U.S. We had 1,000 in Pakistan. We had a dozen in the U.S. And I understood implicitly as I was taking the job that I was not going to build the finance team in the U.S. that you would think that you might need to build in order to do an IPO. I had a team that was in Pakistan, and I knew I was going to leverage and grow that team because, again, there was such a difference in cost. It's hard to say, oh yeah, Bill needs to add 10 more people in back office. That would make no sense. So the real aha moment was, how do I get these people who were bright but young, not the most experienced? Some had. I think when I got there, there were two who were chartered accountants, so the equivalent of a CPA. 3 or 4 people who'd come from big 4 accounting firms, but they were relatively young. They were in their 30s as opposed to in their 50s, so they'd never really done this. How do I get them world class and ready to be the finance and accounting team for a public company? And so, a lot of that involved bringing people over, working with me, working with Deloitte, working with counsel on the registration statement. I think in the 9 months before the IPO, probably for 7 of those months, one of my 3 top financial people was at my side in New Jersey. So we're bringing people from Pakistan over here, showing them how things are done, putting them in charge of audits, putting them in charge of registration statements. Even when we had to get the financials audited for the companies we were buying, you sort of think, oh, you'll just go tell that company CFO, get the books ready for the auditors. But they didn't have a CFO, and they didn't have books in shape. And in fact, in one case, they'd bought 4 of the companies, so there were 5 subsidiaries with 5 sets of books that had never been put together. So I said to my guys, this shouldn't be your job, but it is your job. You're going to have to consolidate it. You're going to have to take the entries that aren't GAAP, and you're going to have to figure out how to get them GAAP. And when the auditors ask questions, you're going to have to figure out the answers, because if you wait for each company to do it, it's going to take so long that by the time you get one set of audits done, another quarter will have gone by. You're going to have to just keep on repeating this. So I had 3 folks who probably got 25 years of accounting experience in the course of 9 months of IPO preparation work, and of course came out so much stronger for it. By now, I've actually got 60 people on my team in the finance and accounting organization in Pakistan. I've got 7 chartered accountants, which I haven't seen anything publicly, but I think that other than the big 4 and government agencies, we may have the most chartered accountants in all of Pakistan. And these guys, they're actually, stepping up and taking responsibility. And they've learned, a whole new, perspective on life, which is when there's a problem, I don't try to deflect blame. I don't try to make excuses. I don't worry about what caused it. I work on how do I fix it. And, if you take that approach, all of a sudden, the fact that there's 30 things that need to be dealt with in the day, at the end of the day, you've solved 27 of them. You're a hero. You feel good about it. And you're ready the next day to go slay some more dragons.
We now enter what we refer to, Bill, as our mentoring round, and it's interesting, always interesting to look back. And again, your path to the CFO office is rather unique, beginning at Harvard Business School. Have you had a mentor or mentors during the course of your career?
I wouldn't say I've had a mentor, but I would say I've had a number of mentors. I've had a number of folks that provided varying degrees of inspiration. Probably starting with my dad, not an atypical thing, but my dad after World War II went to work for Macy's, was an executive there for 40 plus years. I guess that's something that never happens today. Is you go to one job and you stay there until you're 67 and then retire. But I got interested in business from him, and he didn't have an MBA, and always felt that that was something that would have given him an advantage. When I chose even my first job after business school at a semiconductor firm, Mostech, it wasn't that it was a popular firm. I mean, they were actually the leading producer of memory chips in the U.S. But what really attracted me was Jack Fuhrer, the fellow who I would be working for, who was building a cadre of young MBAs who were going to learn the whole business in the course of 2 or 3 years, cycle through finance and production. And I actually spent time in a wafer production line, seeing how chips were being made and running manufacturing planning. So I had a lot of good people to inspire me. Bob Howe, who was the fellow who was the general manager of IBM Consulting Group, great inspiration, came into to IBM knowing that he was going to shake the whole company off, and told John Akers, who was the CEO at the time, "You're going to hate me. I'm going to tell you things you don't want to hear. If you want to hire me, just be prepared. That's what I'm going to do." And he describes the story of going in for a job interview and sitting on this CEO of IBM's desk during the job interview, being as outrageous as he possibly could, just to make the point that I'm here to shake things up. And so I've gotten a chance to look at a lot of good people who've done lots of great things in their life.
The role of the CFO, increasingly we hear it's become sort of a consultative role. Does that mean anything to you, who was part of a consulting organization for a number of years? In any way, did you take anything away from your consulting experience that you think has helped shape your point of view as a CFO?
I might not necessarily call it a consultative role, because I do think of the consultant as makes a recommendation, and if it works, they take the credit, and if it doesn't work, they say the client didn't implement it. And again, I probably have taken a little more of an operational view. I've taken the strategy. Bob Howe taught me, how do you write a presentation, and how do you do a consulting project? He says, the way you start the project is before you show up the client the first day, you write the report. You start by writing, there'll be 25 pages in the report. You write the 25 headlines, the 25 conclusions, and then you start writing, what's the support I need for each one before you show up. And then you start asking questions, and you spend all your time just answering the questions that you need to support your point. And if it turns out wrong, obviously you change your message. But you don't just start gathering facts for the purpose of gathering facts. You go very targeted. So I've certainly taken that approach, which is, again, we could get every metric, we could do every analysis. No, we don't need to do that. What's important? Focus on the one or two important things in a business, and all the little things really take care of themselves. But then I look at sort of that line of consulting, and I just cross it and say, fine. So now it's time to do it. So I'll go do it. And I can remember one time in another business, we were moving to a new office, and somebody said to me, boy, I've never seen the CFO sitting there looking at the carpet swatches and making the decisions. And it's like, we can make the decisions in 5 minutes, or I could delegate it, and people can spend the next 6 months having a committee to decide whether the carpet should have a bluish tinge or a brownish tinge. Let's just get it done. It's not important. So I just, I'll run with things. I'll get things done. And I'll work hard to get my team to take that responsibility, because ultimately, I've said this to Manib, who's my chief accounting officer, a guy who's 30 years old, PwC graduate, chartered accountant. Your job is really to, not to do any of the calculations. Your job is to find the people and to give them the advice, and to get them to take the full ownership, and to be able to present their recommendations and stand by them. And don't just give opinions, then just go and implement them.
You mentioned there's a string of companies, of course, where you filled this role as CFO to date. And is there any public and private? Is there any environment that you especially enjoy, or where the role you feel gave you the greatest satisfaction?
Yeah, I've been in a lot of companies, and they've been at different stages in their development. So I guess I'd say I've enjoyed relatively small startups, and I enjoyed IBM, and that certainly wasn't a startup. Although the part of the business I was in was starting services, starting consulting, was sort of starting up. But I guess if I was sort of focusing, I'd say, and thinking about what do I want to do going forward, because in addition to continuing to grow MTBC, I mentioned I've been on boards, and I still like the notion of staying involved in boards. And in fact, I could see myself. You asked about mentors. I think of some guys I know. One of my board members right now, Howard Clark Jr., That name may or may not be familiar to people. Howard was American Express's CFO and was actually Lehman Brothers CEO for a short time prior to the bankruptcy. So I look at him as a mentor. And you got a guy there who's who's well past the need to have to work, but he's still involved in a number of boards, and it keeps his mind busy, and it gives him an opportunity to say, okay, I was CEO of Lehman Brothers. Here's how we're going to approach this on an IPO. And I guess I look at myself and say, when I'm his age, that's what I want to be doing as well. Is I want to have companies where I'm helping, some of which will work, some of which may not work. And I guess I'd sort of identify sort of two targets. There's the company that's private, that's looking at how do I go public, or maybe it's looking at how do I get private equity, or some other major strategic expansion. And then there's the public company. And again, I don't see the Walmarts of the world saying, Bill, please come here. And I don't see me changing the Walmarts of the world that much, but I do see the smaller public company who's like, how do I enter a new market? How do I do some transformative acquisitions? How do I get into a new line of business? How do I take myself to a new level? Where somebody wants board members who will come in, and I'll sort of take this back full circle. This becomes like your business school case study, except you have to follow through on it. You got to help them understand their business and ask some dumb questions and sort of help people think about how do I do something totally different, and that's good. And not only is it personally satisfying, I actually have found through board work that I've done in the past that when you're on one or two companies' boards and you're focusing a little bit of your time on their problems, all of a sudden you've got a lot more objectivity to the things you're doing, and the stuff that was worrying you day to day in your job, and you start to think about the bigger picture, and you say, maybe there are some more important things that really should be the focus of time. So as you can tell, I'm a big picture kind of guy. I'm not into the details, although I obviously have to manage into the details. But it's just so important for me that people are in a business are putting their time into the things that will really change the business and move it forward, rather than just trying to get themselves through the day.
What is it that you wish someone had told you at the start? And I ask this question two ways. Sometimes at the start of your CFO career, which would have been 10 years ago or more, clearly more.
Yeah.
20, forgive me. Or at the start of your career, your CFO career here at MTBC, what is it that you wish somebody had shared with you?
Yeah, maybe just the fact that even when you're working large numbers of hours a day, the time just goes fast. I mean, I look back and my daughter is 22 years old, graduated college, and is now working. And I'm like, where did the time go? I mean, I remember when she was young, and I remember saying, as I was at IBM, I'm going to spend more time with her later. And boy, the time just goes by so fast.
Is there a personal habit you believe has contributed to your professional success?
I think it's a combination of a positive outlook and saying, no problem is too hard. There's no challenge that you can't solve. And I do try to stay fit, and maybe a sort of an analogy here is the area where I live is somewhat hilly, and when I'm bicycling, no matter which direction I go, seem like I'm going uphill 80% of the time, and I'll be bicycling up a hill, and I'll see two high school kids on bikes huffing and puffing and standing and trying to get up the hill, and I'm just going to make it up the hill, and I've done it before, and I know I can do it again, and so it doesn't daunt me at all. And I'm like, no problem. I could ride up this hill, no sweat. And I guess I look at that in all kinds of situations and say, the fact that I haven't done it before, well, that doesn't mean anything. Just figure it out. Just go do it. And I think, again, if you believe in yourself, if you believe in your people, you can do anything.
Do you have a favorite personal productivity tool?
Sleep, but I don't get enough of it. I'm certainly.
Do you have an application like a Evernote or something?
I use Evernote. I use Outlook. I probably rely on telephone as much as anything else. Is pick up the phone and call somebody and say, hey, here's what I need you to do, rather than sit there, bang it out in a long email that then the person misinterprets.
Is there a book you'd recommend to aspiring finance leaders?
a professor I had at business school, Mike Porter, has written a series of books, and again, they're not finance books; they're really strategy books. But again, my view is focusing on the strategy of the business that drives the financial and lots of other things. So I try to remember. He had a book called Competitive Strategy, and another one called Competitive Advantage. He's done a lot of work on how do companies make the right choices and move from one place to another. And I guess I would advise somebody who doesn't want to be a bean counter, but who really wants to be a CFO, think like a strategist, think like a board member, think like it's your business. And what are you going to do with it? How are you going to make it $1 billion company? So at Harvard Business School, they don't offer an MBA in finance or marketing. Everyone gets an MBA in general management. And first year, you all take the same courses. In fact, you're in a group of 80 people. You're in a classroom. The professors come to you. So, there's no curriculum choice whatsoever. Everyone needs to learn everything. And it's all case study. The assumption is you learned the theory before you've gotten there. I remember the first day, one of the first cases, the course called Control that included accounting. Someone made a comment that made it clear he didn't really understand a lot about like why balance sheets balance and stuff. And the professor stopped him and held up an accounting book and said, here's Robert Anthony's accounting book. It's 557 pages. You could buy it in the bookstore. Why don't you read that tonight before you read tomorrow's case? And so the idea is you got to learn all the background first, but now you're delving into the problem solving. Second year, there's a little bit of electives, but not a whole lot. And again, everybody is really learning about things from a variety, multidisciplinary approach. So everybody's got to focus on the business and the labor impacts and what are the moral implications and ethical implications of what are you doing, and even if you're thinking I'm focused on production and manufacturing, you still got to learn more about marketing. So it's it's a very much a generalist approach, and again, when you leave, you'll have read hundreds, maybe 1,000 different cases on different companies. You're not supposed to remember the cases, but you're supposed to get sort of this framework of how do I analyze whatever comes up tomorrow, because something tomorrow is going to come, but it's going to be different. I'm not going to refer back to the case, but I'm going to have a framework for analyzing and asking questions and trying to make decisions.
Final question. What is the one thing that's really exciting you about finance and business right now?
It's really it's the opportunity to grow things. I mean, I'm in a company that's tripled in size over the last 6 months. Let's see how big we can make it. Let's see how profitable we can grow it. Let's see how much value can we add for our customers. And the number one thing is, what can we do for the people? I love it when I watch people who are working for me learn more, take on new responsibilities. I see team members overseas getting this chartered accountant degree, which is a really, really big deal. It may be life-changing for them. And yeah, they're working hard on business stuff, but I'm also encouraging them to put the time into their studies so they can advance themselves. And it's great when somebody calls me who worked for me 25 years ago and says, Bill, I'm applying for a job. Would you serve as a reference? Or hey, I'm thinking about a new business. What's your advice? It's great seeing those people and having that rapport. And it's going to be fun to look back years from now at people that I will have met all around the world who I had a chance to work with, and feel like I've helped them improve their lives a little bit.
Hello, everyone. Jack here. Hope you've been enjoying our recent episodes of CFO Thought Leader. Please know that I don't take for granted this opportunity to serve you. Your time is valuable, and of course, so is the time of our CFO guests. I'll admit to you, on certain weeks, I will pinch myself and say, hey, I get to do this for a living. I speak to all these impressive leaders. Undoubtedly, there are more aggressive interviewers out there, some who leave no stone unturned. But our swim lane is for finance leaders only. And those finance leaders have a unique style of leadership, one that is rooted in the burden of trust. In light of this, finance leaders must take great care not to forfeit this trust as they step into the role of being a more expressive leader. And that is what CFO Thought Leader is really about. That's why I try to remind myself week in, week out, how fortunate I am. Still, I need your help. Tell us what we're doing right. Tell us what we're doing wrong. Email me your comments at jack@cfothoughtleader.com. And please visit cfothoughtleader.com. You'll find a listener survey right on the nav bar. As always, thank you for listening.